Short exercise 3-9, adjusting unearned revenue. Adventure Gaming collects cash from subscribers in advance and then provides online games to subscribers over a 1-year period. You can read the requirements here as they come up. So we have requirement 1, record the journal entry to record the original receipt of $170,000 cash collected in advance. Record debits first, then credits. Select the explanation on the last line of the journal entry table. So before we get to the adjusting entry, we need to record $170,000 cash we received in advance. So we've got our cash, which is increasing. We're getting cash of $170,000. That means a debit for cash since it is an asset, and again, assets increase with a debit on the left-hand side here. So what are we giving in exchange for this cash? Remember that on the day that we received the cash, have we provided the services to our customer yet? No. Therefore, this is unearned revenue. Let's see what we have here. We have unearned revenue. So not subscription revenue. We have not earned it yet. So we will credit that for $170,000 in order to balance our transaction. And then our explanation here at the end is to record unearned subscription revenue. And again, this unearned revenue is a liability, and that's why we are crediting it, is increasing with a credit. So let's go ahead and check our answer. Well done. Okay, so now we have requirement 2. We have to record the adjusting entry that Adventure Gaming makes to record the earning of $12,000 of subscription revenue that was collected in advance. Record debits first, then credits. Select the explanation on the last line of the journal entry table. So they don't tell us the dates here on the left-hand side, but after a while we have earned this $12,000. So we know we're going to have a debit of $12,000 and a credit of $12,000. So now we have earned $12,000 out of this unearned revenue. So what happens to this liability once we earn and provide some services? The liability goes down. And then how do we decrease the liability? With a debit. So unearned revenue will be our debit. And then since we've earned this $12,000, we have some revenue to record. And so if you'll recall, with revenue, it increases with a credit. And that's why we're going to credit subscription revenue. And then we need our description here at the bottom, and that is to record subscription revenue earned that was collected in advance. So again, we collected it in advance, and now we have earned part of it. Let's go ahead and check our answer. Fantastic. Okay. Now we're on to requirement 3, use T accounts post the journal entry and adjusting entry to the accounts involved and show their balances after adjustments. Ignore the cash account. Use a balance posting reference to show the ending balance on the appropriate side of each account. So again, we're going to be ignoring cash, which I believe was in our first transaction here. So they're going to want us to record then this unearned revenue credit of $170,000 in our T account. So we have that unearned revenue here, and that is going to be increasing our liability by $170,000. That completes our first journal entry. Since we are ignoring cash, we move on to our second one and post that to the T accounts. So we have unearned revenue here that comes up first of $12,000. So that is going to be a debit. And I see we have missed a 0 here in the unearned revenue for that $170,000. And then we are taking out $12,000, and so that is going to leave us with a balance on the right side, the credit side, of $158,000. Since that completes this unearned revenue T account, and then we have still subscription revenue in this last entry here. So that is a credit for $12,000. So that increases our revenue with a credit. And then we have our balance here, so we'll just bring it down because we don't have any more journal entries to record. So again, this is a liability and this one is revenue. And we can go ahead and check our answer. Nice work. So again, this is the adjusting entry that the accountant needs to do anytime they eventually earn some of this unearned revenue we recorded in the first journal entry. And that's it.